Aloha. Hey, it's Julie Zinles, 365 Hawaii 365 group. I'm Keller Williams, Big Island, and I am here today with our wonderful cadre of amazing personalities who are going to be sharing information about Hawaii Island real estate and mortgage update. What we have here is they have point this way to start with Scott Wynn and his beautiful wife, Marla Wynn from the Wynn and Eagan Team, who will be giving us our mortgage update to give you guys an idea on what's going on with the financing. And then we have my husband, Eric Zimelis, over there in the corner there. We've got Amber Haley from Real Broker, Lance Owens from LUVA Real Estate with the numbers behind his head. And he will be spewing forth what's happening in West Hawaii today, while Amber is going to be hitting the East Hawaii market. We are hoping that Jana will be joining us, so we'll be hearing what's going on in North Hawaii. But let's start this party by starting with the dollars and cents. So Scott, would you like to review what's happening with the mortgage market?
Sure, happy to. So let me start by just giving an overview on current interest rates. So 30-year fixed mortgage rates are sitting at around 6.39%. That obviously depends on lots of circumstances, down payment, credit score, all those sorts of things. But that's the average nationwide right now, 6.39%. It's been kind of steady there for the last, I don't know, a little over a month or so. And I know last time we talked on this, we talked about the fact that inflation numbers were going to be released and we would expect that inflation would drop and so would mortgage rates. Well, that did not happen. No. Here's what did happen and why that did not happen. What ended up happening is that the Bureau of Labor Statistics, the ones that released CPI, actually made a revision to April of last year to correct some incorrect numbers that they had previously. And they reduced inflation from last year. So when the inflation numbers got released this year, it wasn't as substantial a drop as what was expected because of the fact that the correction brought it down. So that was one thing that impacted the inflation not dropping as much as expected. But the other piece is that oil prices spiked in that month as well. So between the correction and the oil prices going up, that kind of kept inflation pretty steady rather than the drop we expected. But everything still exactly as I mentioned last time remains the same. And we fully expect that when the inflation numbers get released here, June 13th and then July 12th, we will see those inflation numbers continue to drop and that will bring interest rates down. So just a month delayed from what we thought based on those slight adjustments.
Okay. Hey, so just throwing this out at you guys, you wouldn't know that there was an inflation drop because everyone is traveling like maniacs and they're projecting that this summer is going to be like overwhelming for people who are traveling. So I'm just wondering, do you see people actually spending less? I mean, do you feel like we're not, I mean, it's like inflation is going anywhere different?
In terms of the prices
like
going
consumer
down?
price increases and things like that. I mean, it seems like there's still crazy consumer demand. It seems like everyone's still having a heyday.
I don't know. I don't know that I have an opinion on that necessarily, but I think that people are spending maybe more than what was expected. And I think that's why the Fed was increasing rates as much as they were, is to try to taper the spending down. I think it did work to a degree. I mean, I think sometimes people just didn't have any other choice but to reduce their spending, whether it's on groceries or whatever it might be. And that's just part of it. So their travel is a portion of it for sure, but maybe not as substantial as maybe housing was, with rents that went up in the past that are now starting to come down. Other things that make a bigger impact on the inflation number than maybe traveling in and of itself. And I know that's not just what you're saying, but maybe other consumer products have been tapered down a little bit as well, just because they have been more expensive. And borrowing is more expensive. So buying bigger things like automobiles and things like that have become more expensive. And so that's slowed down as well.
There you go. And then Marla, you were saying something?
Oh, no, I was just saying that June 13th is Scott's birthday, so we should expect good numbers. But credit card debt is at an all-time high, though. So I think maybe people didn't curb their spending. They just used their cards more initially, but now it's been sticking around for a little while. So maybe it's just kind of a delayed suppression of spending.
Yeah. When we were out, I've just been traveling a little bit. It just seems that people are on the post-COVID tear still, now it seems like it's more safe than last year to get on a plane. So I don't know, it just seems kind of crazy. But we are seeing, it seems like we are having a few more rentals are available in Kona, and the prices seem to be dropping a little bit, which I think is part of what's happening nationwide. So that's cool. So is there other things that you guys want to discuss on this one? You want any interesting mortgage programs, anything that's coming up? Are you watching what's happening with mortgage applications? Are more people trying to get mortgages right now?
It did go up for a little bit of time, but it's coming back down again. So I think the higher interest rates, I think, just stop people from wanting to move, whether that's because they are locked in their home and they feel like they should stay put because they have such a low interest rate, or those that are first-time home buyers kind of sitting off the sidelines waiting for interest rates to drop. So again, we have that certainty guarantee that we offer to our clients so that you can take advantage of the suppression in the market in terms of demand. Buy the house now, refinance down the road, and instead of incurring the costs like you typically would with a refinance, we'll cover those costs for you. So there's some benefits there for sure.
Oh,
The only other thing I'd point out is that if you're at all curious about inflation and you're talking about like what are the items that are being impacting inflation, you can go to bls.gov/CPI and you can kind of dig into it. So if anybody wants to nerd out on CPI and inflation numbers, that's the place to do it. You can kind of check out what's going on and what's causing it to be as high as it is. So
I just want to add one thing on that, because I just got back from Washington, D.C. and went to Lawrence Yune's economic report. And it was funny. He had a joke, Lawrence, he's got to have one joke. And his joke was he predicted less divorces this year than last year. And the reason being is you may hate your spouse, but you love your 3% mortgage.
Yeah, you can't get out, right? Yeah,
That's
wow.
really good.
Well, since Lance are on the floor, also I just want you guys to know that since Delania also is showing houses today, again, it's a very busy market in Kona. Eric is going to actually hit the statistics on what's happening in the individual neighborhoods. So Eric, do you want to go first? Or you want Lance to go first?
I'll go first. That's fine.
Okay.
Okay, so in this segment, we usually have three different neighborhoods that we kind of keep track of. One is Pulani Estates, Lokahi Makai, and Ali'iulani. And I'll start with Pulani. So there's only one active listing in Pulani. It seems like, correct me if I'm wrong, Lance, we usually have more than one in Pulani Estates is usually what it is. So, and that one is, it's $989, so it's almost $1 million. So it's definitely a little on, I would say a little on the high side, but it's still there. And in April, we had two, and one sold. Well, I take that back. One sold listed at $899 and sold for $920. So it was above asking price by almost $20,000. So it just shows you that the prices are not slowing down in Pulani Estates. And then Lokahi Makai is, we've got two active at $965, one that's 6 days on the market, 1/3 price, no price reductions. And also we had one that was listed at listed at 800 and sold for $750. And that one was a short sale and was on the market 161 days. But the short sales are always kind of unusual for that. And the notes here are prices are higher than most recent activities and sold is where we're at. And then Ali'iulani, we've got three that are active in Ali'iulani, 1 to 75 days. 499 had a price reduction of 50K, and there's 7 under contract. So they've been definitely moving there. Prices between 499 and 565, and there were no sales in April. Prices are consistent. We'll know more next month after we get more of those sold. So there you go. Those are our three neighborhoods of how they kind of coming together, and we're not seeing much of a difference. Is what it looks like is going on.
Yeah, well, it looks like the condo market's like doing this too, though. So okay, and then Lance, segueing to you on what else is going on in West Hawaii.
So I usually do, because I don't want to repeat of what we just did a couple weeks ago. It's just a 30-day recap. So for the last 30 days, we're going to have a big skew in the numbers, because there was a listing that closed today. It was listed for 32 million and sold for 21 million. So that is a huge
$10 million.
$10 million. If you want to bargain, and look in the $32 million range, because there's bargains to be found out there. But so that's going to mess with all of our numbers. There in the last 30 days, there's been 33 sales. 8 of them have actually closed at or above asking. Some of them $100,000 over asking. So that's good. But if I look at the numbers, and again, they're skewed because of that big one, on the residential homes. Median days on the market to sale is 22 days. Median sale to original price is 96.5%, even with that $10 million discount. So that's kind of interesting. Right now there's 76 active listings in North Kona, where we should have double that. 13 of the 33 sold were cash, 18 were conventional, 2 were VA loans. And on condos overall, there is 34 active right now, and that should be 3 times that amount, or 4 times that amount, I'm sorry. And the median listing price is $660. The sale to original price is 98.8%, and days on market's 12 days.
12. So that's still a very quick market.
Yeah. Very, very good. Very, very strong, very interesting market still out there.
Yep.
I had a funny story on that. I had a client that's all, let me show me some condos, what you got out there, right? And she's all in between, 400 and 600,000. And she gave me a big list of everything she wanted in a condo. And I'm all, you got 9 to choose from. Take your pick. It's not like there was a lot, and some of them were kind of like, well, okay, there are a lot where they have been sitting there. They're not the best ones out there, is what you're saying. So there wasn't a lot out there.
Yeah.
And real quick, the numbers behind me here somewhere. So the top number, and this is kind of, I wrote a blog recently, and it said that I talked about, if you were waiting for the bottom of the market to hit, look in your rear view mirror, because if you look at the top chart is the amount of dollar volumes that's changing hands, and the bottom, if you see I'm terrible at looking in a mirror and pointing, but this bottom line is the actual number of sales. So you can see how much they're increasing again, and that's the last 3 months that you're looking at there. So it's a steady increase on the number of sales is going up more than the volume, but it is still, and if you look at the other side, it is, you look at, they were pretty high equally, and it looks like the number of sales is going up higher than the volume of dollars. So don't know what that's going to say at the end of the day, but it's something to look at.
Okay. Well, I mean, it just seems that, there's quite a lot of demand still, right? And even with the mortgage rates the way they are, we still have lots of buyers in the market, and we're still getting phone calls too, that people saying, I'm coming this summer. So let's see what happens if even we get, we talk about when there's more buyers and there's not enough inventory, prices stay steady. And if they rise. So just you can see how that's going to go too for the coming summertime. Okay, so Amber, are you ready to give us what's happening in East Hawaii, where homes are on sale every day? I can't hear you. I think you are unmuted. Oh, I'd hate to see you have to pantomime. Oh no. I can go on, she'll come back to me. I should have had you test your speaker. The great Amber Haley from Real Brokers having tech issues. So you can put your statistics up behind your head like points.
For something really fast. I think we talked about it last time, but loan level price adjustments. Did we talk about that last month?
Tell me again, was it what price adjustments?
Loan level price adjustments.
Tell me that. What's that?
Yeah, well, they've been in the news quite a bit lately. It's just basically an adjustment to the rate based on risk that Fannie Mae puts on specific loans. And there have been a lot of sensationalized news stories about how it's penalizing the people with good credit that have good down payments, and, like basically robbing from the rich to pay the poor, I think is how it's being positioned.
That's what they said in Facebook. Yes.
Yeah. But that isn't really the case. It's just the credit to those maybe buyers that have a higher credit score and a larger down payment isn't as great. Like the delta has just been narrowed. So there used to be a bigger delta between people with great credit and high and down payment versus people that had lower credit and less down payment. And now they've kind of closed that gap a little bit. So, but of course the news wants to sensationalize everything. Scott probably has a better way of explaining it, but that's the easiest way, I think, to understand it.
So if you had great credit 6 months ago, you get a worse rate now, the way that it's changed.
No,
Okay,
that's what's being pushed out in the news, is
Okay.
that the perception is that the rates for well-qualified buyers went up and the rates for less qualified buyers went down. That's not what happened. What happened is they made an across-the-board adjustment to these individual loan level price adjustments, as she calls them, right? Which every loan is based off of risk. So as you increase the risk, the cost to you goes higher. So if you have lower down payment, that's a higher risk. If you have lower credit scores, that's a higher risk, right? So what they did is they modified these loan level price adjustments. And what they did is they modified them to benefit those that are less qualified to be less of an impact. And they did not lower the impact as much to the more qualified buyers. So it's not that they took anything from anybody else. It's just that the difference, as she explained, I think you explained it quite well, is not as significant as it once was. So they're not taking anything away from anybody. It's just there is for people with less money down and lower credit scores, they're just not as negatively impacted as they were before.
That sounds fair.
Yeah, and the reason that happened is because it's in line with the directives associated with what Fannie Mae and Freddie Mac were created for, which is to create affordable home ownership. And so for those that aren't able to qualify because of affordability, because of down payment or monthly payment, they're trying to make things more affordable.
Okay, that's fair.
I love hearing that too, because you know, in AR when we were there, they've been fighting off the same thing. Like you said, you know, a lot of people just a lot of realtors didn't even understand what was going on with that. And you guys both, Marla, you did a great job explaining it too. One of the things I know NAR has put out several letters to Congress and them that, you know, about even how it started and to get rid of it altogether because of the perception. But they also they were able to get it canceled. I guess there was one coming out next month that they actually are not going to do, right? I'd heard that at our meetings.
Yeah, I know that for a while there was one that was going to be released and then it was put on hold. Do you know what it is, Marla?
It was the DTI. So if they went above like 40% DTI, there was going to be a hit to the rate, but that was going to cause a lot of complications for qualifying because we don't know exactly what the payment is going to be and what the debt to income ratio is going to be until they're in a particular home. And if you came in with an insurance quote that was a little bit high or the taxes kind of drove it a little bit higher, then it was going to drive the rate up because of that price adjustment. So it was going to be a lot of back and forth and it was going to create a lot of complications. I think that's one of the biggest reasons and hopefully they never will.
And late in the process is part of the problem, right? I mean, you could go in for final underwriting, think everything is good to go. And then because the insurance tips that DTI just slightly over, now all this and the entire loan has to be restructured or something like that because of the increase to rate, which increases the DTI even further. And so, yeah.
Yeah. A couple of other really quick changes. VA lowered their funding fee. So that is a positive change. And also FHA mortgages, which we don't see a lot of on the Big Island because the prices of homes are too high. But the mortgage insurance came down.
That's good. How much did it go down on the VA?
I think it's like 0.3. It was a very low number, like 0.3% sort of across the board. It was not majorly significant. I don't remember the number, honestly.
Okay. I thought maybe it was like, hey, a nice chunk. Okay, that's good. Okay, Amber, are you back online there?
I'm sorry.
It's reverberating.
Oh my goodness.
Because of her phone being on at the same time. She's logged on twice.
She's on this one too. Yeah, I should dump that one. Let's see. I can remove.
You're muted, Scott.
Yeah, I was just going to say, Brad had a question in the comments saying, is the change that occurred to the loan level price adjustment similar to the problem that was created in the early 2000s? And I'm guessing what you're asking is that what caused the huge amount of demand that ultimately led to the housing collapse in 2007, 2008? And very, very different in my opinion. I don't think that that's what caused things to go wrong. I think what really caused things to go wrong between the, let's say, early 2000s to the mid 2000s, causing the housing bubble in 2007, was really more related to adjustable rate mortgages with prepayment penalties, balloon payments, no income verification loans, no asset verification loans, no ratio loans, all of those sorts of things. And you started combining all these things. You could do like 103, 105% financing with no income verification with 580 credit scores on a 2-year arm with a 2-year prepayment penalty. That is certainly a recipe for disaster, right? Because as soon as anything starts to go wrong, they can't afford it. And it creates a lot of speculative buying in the market because anybody can qualify. And when homes are increasing at a rate of 8 to 15% annually, everybody wants to get in. And since there's nothing stopping them from getting in, they do until it's not good to be in anymore. And then everybody tries to get rid of it as quickly as possible, which is what causes the collapse. So certainly not what we're seeing now. The rules have changed significantly. I've got some charts that I share with my clients when we sit down and go through consultations with them, showing them this index of how lenient mortgage financing was back then. And we're like 1/5 of the risk that lenders are willing to take now in comparison to what we were back at that particular point. So I think it's a very different type of situation than it was.
Cool. Okay, so I had moved Amber, her second line, out, and now she's having a hard time getting back in. So real quick, anybody in the tech industry over here know how to put her back in if she can't get in because I removed her?
She should be able to just join again.
That's what she says she's trying to do and she can't get back in. I'm gonna try again. Okay.
Well, I'll talk a little bit for a minute. Is one of the things while you're doing that is that the at this NAR legislative meetings, we were there trying to get Congress to listen to the things with affordable housing and some of the issues there. And one of the things that was brought up is the average governmental cost for all the regulations. It has nothing to do before a shovel hits the dirt is $94,000 is the average amount from what regulations put into a home. So we had, there's a little over 1.5 million members now, but I don't know the numbers. There were several. So I almost think 6,000 of us at the national park, the baseball park there in Washington, D.C. And they brought in the congressmen and, senators, House representatives and their staff members. And it was really good meeting, but we were just trying to talk them into, we have to deregulate some of these things. It's crazy. Here on the Big Island, we still have single wall homes that were built in the 50s that have lived through hurricanes and everything else. We've just made regulations so hard and so difficult that it's taking affordability out of the homes. They talked about how areas like California, it's a little over $200,000 in regulations. And I know they didn't mention Hawaii, but I know that Hawaii follows a lot of the California code. So I'm going to assume that that with the regulations and zoning and those issues, that it is a big chunk of unaffordability on new housing here.
Thank you, Lance. I'm gonna be sad if Amber can't get back in to give you guys the East Hawaii update. I'm sorry. I know the bonds, congratulations to Lori and Lance for purchasing their home in HPP in East Hawaii this week. I know that they wanted to make sure that they had still made a great investment, which they have. Here are the questions. Okay. Okay, if you guys look in the chat, Scott just dropped some information in there as well. In terms of just overall concept, you guys, with Janet not being here, I know that we had talked about the upper market in North Kahala. They gave me some numbers. I hear numbers coming back. Hold on. Let's see. Amber, come on back. Just so you guys know, Hamakua, it basically says that for the sales are like the final list of sold prices at 92.67%. In Hamakua, the average price or the median price for a home is $440. North Kahala, there was one current sale that was for $3 million. So that of course skewed the statistics. The other stuff, the sales dollar volume, I can't, it says the final list of sale price in South Kahala was only 89.51%. And the median sales price was $875. So that's going down. And then the median price for North Kahala was $1.1 million, and the final list of sold price was 95%. So they're not getting 100% of it there either. Amber, hey, can we hear you?
Unmute again.
Hi guys, sorry, I have too much on my little screen. Sorry about that. My big computer froze and I couldn't switch my microphone on, and then I had to create a new Zoom account to get in. So apologies. Hello from East Hawaii. So I got your stats for you. I'm sure you're all on the edge of your seat. I'm going to talk about the Puna district and the South Hilo district. So in Puna, that's where we have the most sales over here in East Hawaii. The median price is $350,000. Our days on the market right now is 65 days on market, which is let me see. Sorry, lost my place here on my little screen. So that's quite a bit longer than where we were at this time last year. It's about the same as where we were the previous month, but $350,000 in the Puna district is the median value. That is down a little bit from last month and down a little bit from a year ago, not too significantly different in the data for the Puna district. Now, South Hilo, the median price is $430,000. Average days on market right now is 53. Compare that to the previous month where it was 56. And wow, this time last year it was only 30 days on the market. So yep, homes are definitely sitting longer still. Let's see, our list to sales price right now for Puna is 93%. And for South Hilo, it's just under 92%. The neighborhood where I am seeing the most interest still month after month is Hawaiian Paradise Park. Because overall we have low inventory over here, but that's where the most inventory is at. So a lot of people who are priced out of different parts of the island or who want to work in Hilo, or looking for like a single family home for the price you could get a condo maybe in East Hawaii are coming like crazy over to Hawaiian Paradise Park. So right now there's 61 active listings that are available to buy right now. So that is pretty low inventory because this is a huge neighborhood over in East Hawaii. It's actually the second largest subdivision with private roads in the United States. So it's huge, but just to give you guys some perspective, the lowest price listing in Hawaiian Paradise Park right now is $165,000. I know that sounds crazy, and that is because it is it's basically land. You're buying a fully unpermitted kind of DIY structure. And then the most expensive listing in Hawaiian Paradise Park, I just couldn't even believe this number when I looked at it today, 1.96 million. So that'll be closer down by the water. That's going to get you 1 acre, 2,600 square foot home with a pool, really nice. We've got everything in between that in Hawaiian Paradise Park. That's where I'm working a lot these days. I see almost every new house that comes on the market. So if you guys have questions about East Hawaii or Hawaiian Paradise Park, or HPP as we like to call it over here, be sure and reach out to me and let me know. But yeah, prices are a lot lower than West Hawaii. But we are still seeing a slight decrease overall and still more days on market.
Oh, okay. There we go. And then Amber, what are you seeing? So for like mid Hilo, is that like, are more and more people trying? I know they're heading towards HPP, but did you talk about the median price? We actually have a couple of people who've asked about living right in downtown, like down near the area of like the university and the hospital. What are you thinking? You're muted again. Unmute.
Sorry about that. Yes. So yeah, the median price in Hilo is $430,000.
Okay.
So it is going to be a little more than Puna. And there's just not as much inventory there. So I think that's the biggest struggle for people who are looking in Hilo and are really specific to that area that you were describing. There's just not as many homes for sale. So when a home does come for sale, especially in one of the night, there's some really nice neighborhoods in Hilo that are conveniently located to town. They just don't come up very often. So that's going to be the biggest struggle, is being able to, especially, a lot of this audience is relocating, being able to find the right house and time it. Something you all are really familiar with on the west side of the island, where inventory is even lower. But yeah, the median's 430. So, it's a little more, again, than Puna is going to be. Your money's not going to go as far. You're probably not going to get as big of a lot, just generally speaking, probably a smaller yard. But yeah, that's a median price. So some will be a little less, some will be more. Most of the properties I see there are older homes.
There you go. Okay. So people who are watching this later on for YouTube, if you're coming in to take some of those professional jobs being offered in Hilo, and you're being told that you have to be close to the hospital or the school, know that it takes about 40 minutes to drive from HPP to Hilo at this point, Amber?
Yeah, 34. I'd say closer to 30 minutes. If you hit it during traffic, maybe 40.
Okay. Okay. There we go. And then let's do the old round robin of what are you seeing in the market that might be interesting to discuss. Eric, do you want to throw in what's your story? Where you seeing? You got nothing? You got us. We have a client in contract on a place in Pines, and it looks like the Pines is like the place to be too. And the prices are definitely going up in that complex, which it used to be like 500, right? And now it's getting closer to more than 800, right? Yeah, I can hear you from the backyard, but you're muted.
Unmute. Eric.
Sorry about that. Yes, I would say the Pines has definitely become a hot spot over here, sort of the HPP on this side of what it is. And it used to be affordable, and it's definitely climbing up to the edge of affordability, I would say, compared to everything else at this point.
Yeah, because those are kind of like large condos that sit by themselves in a big complex. So, Lance, are you seeing anything interesting?
I was just going to piggyback off of Amber's. We just had that listing over in Hilo, and it's funny because I don't know if you saw the listing or not, but we always talk about the 10s over here, and I was like, it's an hour and 16 minutes, I think, to Costco and things like that. So it wasn't too bad, and we listed it at 586, and it sold at list price, and we had multiple offers. So I see that strong market on that side. So it was good. I'm just trying to look. I'm sorry, the square footage on it was built in 1990, so it was newer. It was on a 10,000 square foot lot in a 1,228 square foot home. So it kind of reminded me of Kamani Trees homes. We talk about that. Yeah. So to see that home built in 1990 and it went for 586 with multiple offers, that tells you it's really strong on that side. So
yeah, because there's a lot of new construction that's going for 480 over at HPP. And so to have a 1990 house, you're paying 500 so much. Did it have mature landscaping, a couple fruit trees? Cool.
No, it's in the city. So again, it's a lot like, Kamani Trees or something like that. So it was, I think it was all about location. I think you were 10 minutes from the hospital, 10 minutes from the university. It was living in the 10s in Hilo.
Oh, there we go. Okay. So that's a good one then. So the living in the 10s in Hilo, you're seeing it for 550 basically.
Yeah. 586 with multiple offers. Okay. And I hope everybody saw Amber and I's her show last week where we countered back and forth on Hilo and Kona, because a couple of people have remarked to me that was fun. So
yeah, in fact, that was such a special event the only people that were part of the Facebook group got a chance to see it. Those people up on YouTube, if you're not working with us and our real estate partners, don't get a chance to see some of the special little episodes that we air. So that gives us a little plug too, to go to 365 Hawaii Living and join our Ohana if you're not working with a realtor already. And you'll get a chance to get inside our private Facebook group where we have amazing things happening, like these little special opportunities for you to learn more about, like that we did a kind of a pros and cons of living in, it was a Hawaii, East Hawaii versus West Hawaii experience that we had on that conversation. I thank you both for being part of it. That was fun.
That was fun. That was good.
And we got to pull the wins in to do, some kind of like a financial, special event. So, lots of stuff coming up this year. So it sounds like we're kind of like wrapping this up. We got our finances in, we've got East and West, we've got kind of like trends. Is there any other questions that we have from the people who are actually live on this Zoom call? I know that 2 of these people are looking for homes right now. In fact, I think there's one of them, as I hear from their real estate person, that I think they're in escrow. You know who you are. So it's nice to see some successful buyers in this group. Okay, you guys. Well, then if you're on YouTube watching this later, and you want to be part of this Zoom call, we have an email that goes out to all the people who want to be alerted about this call, and also what's coming up with this single conversations that we have with Amber that we put on YouTube, and also with Lance about the West Hawaii the West Hawaii market. If you want to be on the email list, please email me at julie@zemalist.com and we'll get you on that. And again, it's for people who like real estate, but hopefully we can work with you. All of our real estate partners and mortgage partners are amazing human beings. And if you need a mortgage, please contact Scott and Marla. We'll drop their information into the comments below in the YouTube description, and also how to get a hold of our real estate partners as well. So with that, we say aloha, and we'll see you guys in June. Okay, you guys.
Aloha.
Aloha.
Aloha.